3 sessions. SPX at 100% coiled for 3 consecutive sessions. This is not a compression event anymore. That's a pressure event. And the longer it holds without resolution, the more violent the break tends to be when it comes. Today I'm covering everything the framework is showing this Friday morning. And there's a lot happening across the entire asset complex simultaneously. We got a Confluence 10 score on the Russell 2000 confirmed across 5 timeframes. Gold short has played out and the entry window has closed. Bonds are coiling 93% simultaneously with equities. And out of a universe where every major index is failing its deviation filter, 2 individual equities are cleared for entries today. So I'm gonna walk you through all of that, what the framework is reading, why it matters, and what to watch for when this coil finally releases. Let's start with the regime. The framework is now reading an inflationary pump. Composite is at +4 out of 9 and notch lower than yesterday's 5. So here's what that means structurally. The equity layer is fully active. All 4 major indices, the SPX, the Nasdaq 100, the Dow Jones, and the Russell 2000, they are all reading bullish. But the bond layer is off because TLT is bearish. And that one layer being off is what's keeping the composite below +5. In inflationary pump at +4, the framework stays constructive for equities and risk exposure, but the signal ceiling is lower than it was on Wednesday open. The practical implication is simple. The deviation filter becomes the primary gate. The criteria for new entries tighten. And today, only 2 instruments are passing it. The composite stepping back 1 notch isn't a regime break, it's a narrowing breath. And in this environment, you don't chase. You wait for the filter to open. So before I get into individual instruments, I need to give you the structural picture. Because what's happening right now across asset classes simultaneously is unusual. The SPX is coiled at 100% on the 4-hour. It's the 3rd session running. We have the Nasdaq 100 coiled at 89%. We have Dow Jones coiled at 93%. We have Russell 2000 coiled at 98%. And TLT, the 20-year treasury, coiled at 93%. And bonds and equities are compressing at the same time. That's a cross-asset coil. When volatility resolves across multiple uncorrelated instruments simultaneously, the moves tend to be large and fast. The framework doesn't manufacture urgency from compressed readings alone, but when these many instruments reach extreme coil state in the same regime, the probability of a large coordinated directional move increases with every session passing. So let's look at the charts. So this is the S&P 500 on the 4-hour. And the current price is 7,123. The AVAP, which is the anchored AVAP, sits approximately around 6,993. That's the institutional cost basis reference for this recovery swing. Price is sitting 1.8 above it. The deviation filter threshold I use is 1 to 2% deviation. At 1.8, we are just inside what's actually a tradable threshold, which is why the filter is now open. The volume composition reading, the framework's volatility compression metric, it is right now at 100%. It's maximum, and it's been at 100% 3 consecutive sessions. So here's why that matters. Volume compression measures how compressed the price action has become relative to recent range. At 100%, there is essentially no direction resolutioning happening. So energy is loading. The longer it holds at this reading without releasing the upside or the downside, the larger the eventual move needs to be to discharge the pressure. We have a win rate on a 500 bar look back on SPX at 82%, and that's 17 completed signals. 17 for for 17. When the deviation filter opens on SPX while it's at coiled 100%, that becomes the highest priority trade trigger in this entire recovery cycle. The VP delta is reading plus 12%. Modest buy-side pressure accumulating inside this coiled area. Institutions, they are not selling into this compression. SPX is the index closest to its filter. It's just inside the deviation filter. So it has been in a modest consolidation. The current price is moving from just above the deviation filter and is now at 1.8. And the framework, it is now opening on the instrument with 82% historical win rate, sitting at maximum energy storage. So that's what we are watching on the S&P 500 today and into the next week. So now the primary signal of this session, it's the Russell 2000. It has printed a confluence score of 10 on 5 time frames. The confluence 10 is the maximum conviction reading the IVT framework produces on a single instrument. Multi-time frame convergence at confluence score at 10 means the framework is aligned from intraday through intermediate time frames. Every layer in the same direction at the same time. So now the current price is 2,770. And AVAP sits approximately at 2,650. And that is a deviation of 4.7%. The volume compression is at 98%. The second highest compression reading in today's universe, behind only S&P 500. So the buy factor stack, the Russell today is volume, absorption, value area, the Cantillon regime, and the deviation filter. 5 active factors simultaneously. So this is not a thin signal. Every layer of the framework is aligned in this bullish direction. The win rate is 78% on 9 completed signals. So that's 9 for 9 clean. And the single obstacle is only the deviation filter. At plus 4.7% VWAP deviation, price has run beyond the acceptable entry band. The framework won't chase a confluence 10 if the entry zone is this extended. So the filter is explicitly closed at this deviation level. So what I'm watching is that the Russell's VWAP deviation compresses towards the 3%, either through a price pullback or through an anchored VWAP catching up on the intraday. So the framework opens an entry in the highest conviction instrument in today's universe. We have a confluence 10, 5 time frames, 98% coil, 78% win rate. That combination, when the deviation filter passes, is one of the most statistically compelling setups in the current recovery cycle. So flag this as a standing session alert. The setup is loaded. The only question is whether the deviation resets enough to open the entry band. Wednesday's brief, I flagged gold as the standout actionable short. It had a bearish confluence 8 confirmed on 1 time frame. It was coiled at 76%. The deviation filter, it passed at minus 1.5 VWAP deviation. So that was an entry signal. In 48 hours, 2 things happened simultaneously. First, the conviction upgraded significantly. Confluence has risen to 10 on 3 time frames. So maximum confidence now confirmed across 3 time frames. So that validates that the institutional bearish position, it was actually structural, not a single time frame anomaly. Second, price moved down, as you see, from the VWAP. Deviation is extended minus 2.6 right now. Price has run below the acceptable entry band. So the deviation filter has flipped from pass to fail. So the gold short has already played out. Those who entered on Wednesday's pass signal are sitting in a confirmed profitable position with the framework's full confidence 10 behind them. So for new entries, the framework won't accept a fresh short at these current levels. Minus 2.6 deviation is too extended. Chasing at the extension is where the risk reward invert. So the next gold entry triggers require a VWAP reset, a bounce in price that brings the deviation back to -1 or to -1.5, followed by a reconfirmation of the bearish signal. So the setup is structurally intact, but the institution conviction has upgraded, but the entry protocol has closed for now. So this is how the framework is supposed to work. Identify institutional setups at entry quality deviations, hold through confluence upgrades, and close the entry window when price becomes too extended. In our Wednesday brief, we got the entry right. Today's brief confirms the hold flags where the next entry becomes available. Now let's look at the 20-year Treasury bond ETF. TLT, we have a deviation here. We have a -1.7. The confluence score is 9, confirmed across 2 time frames. It is still bearish and it's coiling at 93%. The win rate is here 86% on 29 completed signals. 29 for 29 clean. That is the highest win rate in today's entire universe. When TLT framework signal fires and the deviation filter opens, is the most historically reliable signal the system currently tracks. Right now, the deviation failure is failed at -1.8, just outside the acceptable entry band. The floor support sits at approximately 86.5. That level also happens to be near the lower part of the value area. So what makes TLT important today? That isn't just the setup, it's the whole concept. TLT at 93% coiled, simultaneously with SPX at 100, the Nasdaq at 89, Dow Jones at 93, and Russell at 98. That's a synchronized cross-asset compression event. Bonds compressing in the bearish direction, while equities compress in the bullish direction within an inflationary pump regime. That's the framework's picture of capital rotating from bonds into equities. While TLT's deviation filter opens, that's the short entry for anyone trading a bond. And it's also a regime confirmation signal. Bonds resolving lower and equities resolving higher simultaneously would be a textbook inflationary pump expansion. Have this flagged. It's the second highest conviction signal in the universe today, and it is closed. So when a market is going up as it is right now and are at all-time highs, we have to be careful. We cannot chase. So finding instruments that are within the parameters of your framework is very hard. But I spent a lot of time yesterday trying to find some good trades. So in a universe where all 4 major equities indices are failing, these are the only 2 instruments the framework is clearing for active entries today. The one is BCE, it's Canadian Telecom. It's listed on New York Stock Exchange. The price is right now at 24.09. We have a VWAP deviation of 0.6. So this is a pass. The buy factors here are only 5 on 2 different time frames. So this is not a very high conviction trade, but it kind of shows you that we went down even as the market went up. It found its floor at the POC. It then crossed the AVAP and we had a retracement, and now yesterday into the close, it crossed the AVAP again. But as you see here, it's only S2 and the confluence score is 5. This is not a high confidence trade on this one. I would not put a full trade on this. And we have a coiled 81% compression that tells you that this instrument is loading up for a move. So GE Aerospace, also on the New York Stock Exchange. The price is currently at 282, but the pre-market is 281. So it's around the AVAP. It had earnings. It dropped on the earnings, but it tries to reclaim the AVAP, which it did into the close yesterday. So we now have a buy signal. The deviation filter is passing at only 0.5%. But again, we have a confluence score that's only 5 on 2 time frames. And one thing to notice, GE's volume compression, it reads expanded 0%, which is worth noting here. Where BCE is coiling and compressing, the GE has already had its move. So this is a very different profile. GE is in active directional participation mode while the indices load. The swing age of 499 bars on a bull swing type indicates a structural long uptrend. The buy factor is sweep plus deviation pass. Institutional sweep behavior combined with the VWAP deviation alignment. And the win rate is 73 with an 11 bar average hold time. So BCE and GE are the framework's two cleared entries for this session. In inflationary pump, individual equity position often outperform the indices during a coil loading phase, precisely because capital is being deployed selectively rather than broadly. And these aren't consolidation prices in a low signal day. These are the instruments the framework is actually clearing. And that distinction matters. So let me pull this together. The most important thing the framework is telling you this Friday morning is structural. The compression is not over. SPX has been at 100% in 3 sessions. The Nasdaq has been at 89% and Russell at 98%. The TLT is at 93%, 5 instruments spanning equities and bonds, all in extreme compression state simultaneously, all within the same inflationary pump regime. The IVT framework, it doesn't generate pumpy urgency from coil readings alone. But when this many instruments reach this level of compression at the same time within the constructive regime, the probability of a large coordinated directional move increases with every passing session. The regime is constructive. The directional bias across the equity complex is uniformly bullish. The bond complex is bearish. Inflationary pump +4. The equity layers are on. The bond layers are off. It's exactly the structural state you expect to precede a risk on expansion. The 2 triggers to have on your radar. The Russell 2000. If Russell 2000's VWAP deviation can compress from currently 4.7 towards +3, the framework's highest conviction signal in the current universe becomes actionable. 2. The S&P 500 has a passing deviation filter and it has a coil at 82%. So it's ready to make its move. These 2 events are what upgrade this session from the current selective entry environment to a high activity, broad entry window. Until then, we have the BCE, we have the GE that are all cleared positions. Gold is a hold for those who entered on Wednesday, and TLT is flagged and closed. The coil is 3 sessions old. The pressure is real, and when it releases, you should be watching these instruments. So you can read all of this in my daily brief on Substack. It is free today. The link is in the subscription. And if you found this useful, please subscribe and share this with people you think could make a use of this. The paid tier on my Substack gets full instrument by instrument analysis. They also get access to the IVT terminal on TradingView and on my webpage, where we have a lot of tools. We have an IVT stock scanner and we have an option analyzer. All that is in the subscription. So see you next time. Have a great Friday. Trade safe. Bye-bye.